Hi guys, this is a Bitcoin technical analysis update for 9th of April, Saturday 2022. Before I start, if you want to join the group, everything's here, educational programs, and we are back on Twitter here at YouTube Freedom, and obviously you can follow me on the Facebook page too and message me through there, and obviously we have the YouTube channel as well. So let's take a look at the long-term count for Bitcoin. So everything started in 2009, much alongside the SPX bull market, which really kicked off a new cycle, as it were. Gold topped in 2011. A lot of that money ended up going into Bitcoin. We believe the SPX is approaching one more new high to around 55 to 5,700. That will then end a long-term cycle for Bitcoin. The long-term count on Bitcoin, as I had it 3 to 4 years ago when I called a crash, was that this was the 1, this was the 2, 3, 4 going into a 5, which basically tops you there. Clearly, Bitcoin had other ideas rather than going into a long-term bear market, and we ended up correcting here, much alongside the stock market, which I always knew was going to make a new high. Bitcoin, I honestly didn't think was ever going to make it all the way up to 60,000. But either way, if this was not the 5, there is the potential that this is the 5, i.e. the 5, or the top at 69,000 from around 6 months ago. This would then be the 4, this would then be the 3, and this would be the super cycle count on Bitcoin. Let's just call it super cycle. So how do we get 5 waves into here? Because I've never really liked this. But the only way to do that is to call that a 1, 2, another 1, 2, 3, 4, 5 into a 3, then an extended wave 5. That would then be the lower degree. Let's just call it primary, turn it into a red. That's just getting in the way a little bit too much there. Let's just take that to a micro count. Really, the definitions are not important here. So that would be the 1 into a super cycle 2, 1, 2, 1, 2, 3, 4, 5 into a 3 and 13, then a 4, ABC, then a 5. This was then a WXY correction. It's the only really way it makes sense. Technically, it's not an ABC, because in a C wave, you have 5 waves in the C leg, and here obviously we have 3, so we can just call that a WXY. So this was a effectively 2-year bear market to kick off the 5. To start the 5. So can we get 5 waves from here into here? Well, the only way it works is if you truncate this leg here, 1, 2 into another 1, 2, 3, 4, 5, 3, 4, 5. So certainly one of the possible counts that we've had since the beginning of the year is that Bitcoin has formed a long-term top, okay? And I don't see Bitcoin taking out this high, honestly, before the end of the year, or, you know, quite possibly a multi-year top has formed here. We think the SPX is going to make a new high. Nasdaq, we're a little bit 50-50 on. We have rising interest rates, rising 10-year yield, and we have rising dollar. Dollar is set here to go a lot higher. By the US midterms, you know, we're talking well above 100 here. So if this is the long-term count, one of the possible, possible explanations here, then what that means is Bitcoin is now technically going to correct the entire move from 2009. Clearly, we don't expect Bitcoin, to ever come back down to 3K. That's not for 1 second what I'm saying. But as an absolute minimum, there is the possibility eventually, when all is said and done, and all is said and done could take months here, if not years, we're going to correct effectively, the entire move, right? So that then sets up a possible multi-year bear market. So for Bitcoin to now make it to 100,000 as per the Plan B stock to flow ratio, I don't see that happening anytime soon. Just taking the most basic of fibs on the log scale, you're looking at a 50 at 16,000. Clearly, a challenge of the 20k top is somewhere around 20k. And if you take a fixed range volume profile, let's have a look at where the volume is. And let's take the volume profile from the initial low all the way back in 2018, December. Well, as you can see, not a lot of volume came into this market above 20,000. There's not a lot of volume there at all. Let me just make sure we're doing this correctly with the volume on. Probably still gives you the right reading. That is the actual volume. There's not really a lot of volume there, which kind of signifies to me that a lot of it was kind of FOMO, propped up by stimulus checks, blow off top rally in the Nasdaq, brought in a lot of retail traders looking at a short-term fixed range. And one of the on-chain metrics, there's certainly a lot of holders here short-term who have purchased above 50,000, and the volume profile helps to confirm that. So if you've bought above 50,000 here over the last year or so, it's now at 42. At what price are they going to capitulate at? Well, as a minimum, it would take out these lows at 28,000. So there's not really a lot of volume here. The one standard deviation starts at 30,000, but a lot of the volume is all the way down here. And in terms of Elliot Wave knowledge, we know if you do undergo a super cycle correction, or at least any large degree correction, it is often the case it can make its way back into the range of the previous wave 4. So we know that from looking at thousands and thousands of charts over many, many years. So that would be the longer term count. Certainly that is one of my possible counts which I have. Now if we just shrink everything down, let's just take that to the smallest submicro, just so it's not getting in the way. There you go. Now, what else helps to confirm this? Well, it is the logarithmic elliptical lines, which we have shown in the group since the start of the year, which is something like this. Once again, it's not picture perfect, but it's there or thereabouts. Once again, I'm trying to get the... In fact, let's just take away this micro count out of the way, just so it's not... And let's take this line out of the way too. So can we get this to be as accurate as possible, where it's there or thereabouts, where it ends up going through all of these lines? It's pretty much there or thereabouts, right? So this is the logarithmic elliptical line. As you can see, percentage wise, I mean, we're nowhere near in the same leagues as we were before. That's 99,000% move, 58,000% move over 731 days. Next bull market, 11,000 move. So we're really falling here in terms of percentage gain. Technically, this was the low at 3148. The high was technically there. 2,000% move. So by what factor are we decreasing here? Well, just rough maths, I would say that's about a 6x there. 11,000, maybe 5 times, and here it's obviously perhaps a double there, isn't it? So 99,000, 58,000, 11,000. We've dropped by, a factor of 5 to 6 again. You drop that down again. The next bull market, maybe 400,000%. If you drop it by a factor of 5 or 6, it's very, very clear the gains here, percentage wise, from the previous major term low, major short medium term low, is going down, and you can see that in the shape of the elliptical line. So that is quite clear to me. Now, why don't we draw in the other side of this line? Well, once again, we're doing it completely by freehand here. We're trying to get the most accurate line that we can. This kind of curls in a little bit there, really, doesn't it? So we can just probably make that something like this. So it's there or thereabouts. Now, how accurate can we get this line? Well, let's try and tag it onto there, and let's make sure it runs through the major lows that we have seen. So it's something like this. Something like this makes the most amount of sense to me. I would say it's there or thereabouts here on the weekly chart, and it's something like this. And obviously it's kind of flatlining here, isn't it? Yeah. Obviously you could draw it like this, which suggests more of a drop towards 7-8k. But I think it's something like this, where it kind of, this was a lower wick below this line. It touches the low in 18, definitely touches the low in 15, and it's there or thereabouts when it comes to this line here. I can't quite get it to tag off this line. If it does do that, then it's more like this, but then you kind of have to push this up a little bit too. So I suppose something like that would suffice, right? Let's leave it at that. So that would be the same line effectively, just connecting the lows. We are on the monthly chart here, by the way, so I'm talking very, very long-term count. So how do we get from a possible top here, long-term top, on November the 1st, 2021, how do we get from here to 43,000 all the way back down, somehow touching this line? Well, the first thing to say is we've said 20k is a possible explanation. So assuming we just go straight down towards this line, at what point in time do we touch 20k? Well, that gets you towards the end of this year. Can Bitcoin hit the lower elliptical line on the log chart by December 2021? I think that's very much possible, especially if you convert this to a weekly chart. You say, okay, is it possible? Well, there's obviously a lot of stops underneath here. That would be an obvious target, and this, whilst it did start off as a leading diagonal 1 2 3 4 5, clearly that's not the case. The reason is this wave 4 has taken too long in terms of time, which means all of this 72-day correction cannot be an internal wave 4 retracement relative to the wave 3. It just doesn't have the right look. The only way to read that is probably an A, B, C into here. This is now a B leg, and that's going to come down into a C leg. Could that be part of a much more larger correction? Sure, of course it can. 1 2 3 into another 1 2 3 into another 1 2 3. Maybe we end up touching this line more like April 2023. Okay, just because you get a 3-wave correction doesn't mean that's the end of it. Okay, if Bitcoin is on a super cycle level correction here, this could last multi years. And we have said the next bull market may very well last between 300 to 400%. Maybe once we touch this line, then we get the 300-400%, which kind of makes you more wanting to buy Bitcoin somewhere below 20k. Like, okay, fine. Then we get the big moonshot to 100k. So to me, given the two most important things in the stock market, which I mentioned to my group on now a weekly basis, you lose money on the entry, not on the exit, number one. Number two, risk and reward is dynamic. It changes. The risk and reward of holding Bitcoin at 60, 50, 40,000 is clearly a lot higher, as in risk-wise, than it was buying at 3k. Buying at 3k, 2k, 4k, you can't really go wrong. There's not a lot of downside left. It's just gone down 90%. So to me, that makes a lot of sense. Once again, let's just take the absolute basic knowledge of Fibonacci and let's just do a 1-to-1, right? Well, your 1-to-1's at 23k. So something like that may very well play out. Let's just add into that very basic knowledge on Fibonacci time. Once again, if you don't know any of this, good idea to take the masterclass. All the links are there. Take a 1-to-1, right? Let's just take a 1-to-1 in terms of time. So once again, it doesn't have to do this, but it's a clear 1-to-1, right? Just so we get a ballpark, because it's important to have ballparks when you're dealing with something like crypto. You know, what time is it going to reach a certain target? Yeah. So something like that. This would suggest 13th of June 2022. Absolute basic knowledge here. I've not done anything fancy at all. Doesn't have to follow this. We could go into a more complex correction. Assuming the first leg down was an A leg, and we've now made a 72-day B leg. This correction, this C leg potentially, or this Y leg, because obviously Y has got 3 parts to it. C leg has got 5. Doesn't really matter if it's C or Y. That's not important. Assuming this third wave of this correction takes the same amount of time as the first leg and reaches a 1-to-1 wave equality Fibonacci wise with the A leg, it should get us to roughly 23k by June 2022. What do I think of the dollar index in June 2022? Well, I've been bullish on the dollar since late last year. I told my group it's going to go well above 100, and really it could easily go to 110. Is that possible? Well, the answer is yes, especially given how corrective this looks. And it's very simple, in fact. if this wave is corrective, almost by definition it implies Bitcoin isn't ready to challenge these highs. Why is that? Because this must be correcting all of this. So if this is correcting all of this, we know everything occurs in 3s or 5s. There has to be another leg down. Like I said, we could potentially get a big moonshot. Hey, great, pat on the back. Or we could then go into another correction. Either way, however way you look at it, given how awful this last week looks, alongside the general choppy nature, and the fact that the altcoins have had a major short squeeze, a short squeeze being responsive trading. They are buying to, the shorts are effectively buying to close. They're not buying to open. You're buying to close your shorts. You're not initiating a new trade. Once again, we discuss all of this on the masterclass, right? What is the difference between initiative trade and responsive trade? Very, very important knowledge there to have. Very, very useful. So that's just something to have a think about there with the long-term count. I think we've approached that in very different ways. Either way, the risk and reward as of this current moment doesn't dictate buying Bitcoin in any kind of size. Finally, which is the one indicator that isn't really an on-chain indicator, because I don't really believe in on-chain. On-chain really is there just to suit people's bias and give them, you know, very much a confirmation bias and help people to absolve blame for why they can't read a chart. Much like the media, really. So if we just have a look at this, this is really the only moving average that I would say has any relevance whatsoever with anything that I do in terms of analyzing a chart. Okay, moving averages, there is an educational video. This is the 200-week moving average. There is no doubt in my mind whatsoever. This has provided historically good long-term average moving support for this market. Once, twice, 3, 4, 5. Interestingly, it's amazing how everything lines up. I mean, well, by definition, first of all, it's a 200 week moving average, right? So it's very much lagging by 200 weeks, right? So it's not going to move in a fast way, right? Just to highlight that, you know, the beginning of, beginning of this year, we were effectively here, 19.2. Right now we're at 21. So it moves very, very slow. By June, could this also intersect into here, right? Is the stock market that perfect? Well, I would have to say no. However, it is interesting when many things line up. Are we setting up for a summer low on the 13th of June, somewhere between 20 to 23,000? There's no doubt there will be long-term investors of this market, smart money, institutional money, whales, who no doubt believe this market will definitely go higher. And I suppose, who am I to say that's wrong? You know, Bitcoin has proven its worth over 10 years, but I do have my doubts as to how quick we can make a new high. But regardless, there will be buyers around this date in this region. So that concludes this video. Hopefully you guys found that interesting. If you did, please do like, share, and subscribe. Join the group if you want to. Join the educational courses. You can follow me on Twitter. We're back on there with a new Twitter handle. It's at YouTube Freedom. It's mainly going to be to share charts every now and then. I'll be uploading the YouTube videos onto there. Maybe have a look at the new interesting features on Twitter. See what we can do with that. You guys can follow me on there. If you want to message me, do so through the Facebook page. And that is my current take on Bitcoin. I just don't see any reason why Bitcoin, as of this moment, given what the yield situation is going on, and that's a real little intro for the next video, the most important line in the stock market today. What is that? Well, it's certainly not got anything to do with Bitcoin. Everything is coming down to this line. Let's just take off this moving average. It's all coming down to this line. What an important line this is, right? How people have been hedging with bonds the last 2 years, I don't really understand. We're going to hold the line here. That'll be interesting for the next video. Anyway, I'll wrap it up there, and you can follow us, and you can have a look at the group and have a look at the masterclass if you want to have some more knowledge on how the stock market works. I'll catch you guys soon.